Let everybody in.
This meeting is being recorded.
Crypto and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. If you want to move, all right, good morning, everybody. Welcome to Snipers Live Trading. Get your dancing shoes on. We got a lot to cover today. Let's get
Mike,
started.
having problems with your audio again.
Oh, crap. Darn it. You know what? I didn't hear correctly. That's why. That was a beautiful song you all missed. Good morning, everybody. How's everybody doing this morning? Hey, Gerardo, I think the rainy season might be coming. It's cloudy today.
I was saying that 2 minutes ago when we were talking. Get ready for the next 6 months.
Yeah, it's going to rain every day almost. I'm kind of ready for it because it's been hot and sunny every day, but I like it. I do like the sunny weather, being from Florida. All right, well, we're gonna do what we do normally. Let's start by taking a look at the markets. Of course, this is a you know, for me, Monday mornings is like I don't know, it's like Christmas, you know, like what's happening this week? It's a game, it's a fun game, and with the rules that you're discovering here in Snipers and the other MWTC programs, hopefully you're starting to see it as a game. It's a delicious game. A game where we win and sometimes lose, and emphasis on the sometimes with these credit spreads. I want to show you our all-time performance on the short-term credit spreads, and I'll show you that in a few minutes. Let's just start by just looking around a little bit. I go here every morning, CNBC. Now, as snipers, we're looking for those opportunities of stocks that might do something at the open, and so we can keep an eye on these stocks here: Schwab, Dell, Alphabet, and HP. So I'm going to be looking at those pre-market to see if there's any kind of sniping opportunity. Maybe the stock's gapped up or down, and the IV is hot in the morning when retail orders are coming in, the market makers are trying to grab all the orders, feeding frenzy. We can oftentimes make a good money in the first 15 minutes of the market. By the end of the day, be sitting at a nice little ROI in one day. That's possible. We've done it with USO trade, and we're going to see if we can do it this morning. Stock futures are a little changed as Wall Street waits more earnings. It is earnings season. If you're interested in discovering how many earnings are in store for this week, you can go to finance.yahoo.com and you can type in earnings, please. Whoops, where is it? No, of course I can't see it. Let me do it this way. Yahoo earnings. Usually that comes up. That's the first time it's not done that. Yahoo earnings calendar. And then from here, what's really cool about the way Yahoo displays earnings is it shows you the numbers each week. So we've got the earnings are starting to heat up this week, and then next week, check out next week. It really starts kicking in next week. 225. There's 1,000 or so earnings announcements next week, and then moving week to week, it stays pretty high through most of May. Let's go to the second week in May, lots of earnings. And then the third week of May, lots of earnings. So we've got a good month of primetime earnings season. And with that knowledge, I want to take you into a new ranker today. And we're going to look for companies that have strong earnings. So that's coming up. I also go to Bloomberg. And I don't see much. I looked this morning. I always do before we do these calls, and I don't see a whole lot here. Morgan Stanley strategist sees U.S. stock rally at risk. We're seeing a lot of that from the likes of Morgan Stanley and J.P. Morgan, the big finance houses. They're all calling for potential recession. I don't see recession. The R word anywhere in the news today, but rest assured that will pop up. And if it keeps popping up, we may very well see a movement, a downward movement. Now, last week we had the PPI, the CPI, jobs report. All of them came in as we needed to. The CPI, the PPI, the Producers Price Index, Consumer Price Index, two primary, most important inflationary reports. They both indicated a contraction in inflation, so inflation is moving in the right direction, as well as jobless claims increased. So that's also a sign that these interest rate hikes are starting to take hold. So that's what happened last week. And when we look at the markets, let me just put this up. I put this up once or twice a month just to make sure that you all have a list of all the future symbols that we can look at, as well as the ETFs for each of the four corners of the market. So if you need that, this will be in the recording. We are 6 minutes in. You can go right to this slide and copy these down if you need. So last week, I'm going to move right into the futures right now. Let's go to the ES/ES. That is the S&P 500. All right. So during the last week here, we had those positive, what would be deemed as positive reports for inflation. Not much happened. And so the markets are like, what do we do now? We've got strong resistance at 4,200. And the other thing I wanted to look at is if I look at a longer term chart, let's go to a 3-week chart, not 3-year weekly chart. And you can see here, we've got this 4,200 level that's really strong. It's been strong since here. We've got resistance again up here, and then all the way to 4,600. I don't know where the markets are going. I don't think anybody does at this stage. I just lost my connection to Thinkorswim. Can you still hear me, Gerardo?
That is correct.
Okay, good. I thought I lost my connection. Now I lost Thinkorswim for some reason, so I got to log back in. All right. Let me get back in here. You can write down my password if you want. There you go. Okay. Take 2. All right, so while I'm waiting for that to come up, we do have some reports coming out this week. We got the Fed Beige Book, which is sort of like an internal document that has anecdotal evidence about what's going on in the economy. So that's coming up. That's not really a big mover. Housing starts, building permits. Keep an eye on the housing market. Interest rates rising does normally contract the housing market. People will buy less homes. Mortgage rates are higher. So that slows that market down. So keep an eye on that. Jobless claims coming out on Thursday. Some Fed president speaking. And then we got more PMI data coming out on Friday. So not a really huge week. Jobs is really the main concern for this week. So we'll keep an eye on that. I would imagine that it's going to contract, meaning more joblessness. Let me go back to my list here. We're going to move through the futures. So back to the ES/ES. I was looking at a weekly chart, and it's pretty clear in the daily chart as well. 4,200, we're reaching new heights. That's a key level. If we break above 4,200, and there's perhaps some volume and conviction behind it, we might see further upside from here. The Fed meets May 2nd and 3rd, the first Tuesday and Wednesday of May, coming up in a couple of weeks. So that is a potential market moving catalyst as well. Let's move through. Let's go to the Dow Jones Industrial Average /YM. Yeah, pretty bullish. Strong resistance at 34,500. Similar pattern to the S&P 500. Let's take a look at the NASDAQ. This tech-laden index is now flirting with 13,250 or so. 13,250, 300 or so, somewhere in there. So we got some strong resistance there. Similar pattern, but this index is more bullish than the others. It's at highs not seen since August of last year. So that coupled with tech is a good bullish bet at the moment. All right, then let's take a look at the Russell 2000. The small caps have risen. I've said this before. Small caps sometimes lead the market. Certainly the IWM or the Russell 2000 is in a bullish posture as well, similar to the other indices, strong resistance at 34,500. My gut is that we'll hit this level and then retrace. I think probably what we'll see from here, depending on what happens with earnings, and earnings are supposed to start cooling off. We'll have to wait and see. But if that does start happening, then the markets should retrace from here. So earnings will be a big catalyst over the next handful of weeks as to whether or not the S&P 500 or any of the other market indices set higher highs from here. Strong resistance across the board on all of them. That resistance level probably will hold unless earnings are really good. Okay, what else? Let's look at gold /GC. Gold is a really good bullish bet. It's primarily been driven by the strength of the US dollar, which is in part of the reason gold has risen. So we want to keep an eye on the US dollar as well. And the US dollar rose the last couple of days. So that's bringing gold down. Don't see any risk off there. I've looked, don't see it. Let's take a look at bonds. Bonds choppy sideways. Rates will likely be lifted in 3 weeks on May 3rd. And with that imminence, then we could very well see downward movement in bonds. But man, it's just really choppy, hard to know. People are buying more bonds now because they're paying more money. The yields are higher because of interest rate hikes. So bonds are becoming more attractive and a place to keep your eye for risk off. And that would mean bonds are rising, even in the face of lifting interest rates, which traditionally drive bond prices down. Let's take a look at oil. Yeah, look at that. Here's /CL, the price of oil. OPEC cuts here drove oil up at 80. We got some resistance at the 200-day average currently. It's flirting with it. Let's zoom in. I'm still liking oil above. I like oil above 75 or above this 50-day average for a credit spread. We've got one on. We've had two on in 3 weeks, and they're both. The first one was a massive winner, and the second one is following suit, although not as much credit. Okay, so there we go. Let's do this. Let's go back over here and take a look at some of these pre-market movers. Schwab. Maybe we can snipe something here if the news is big enough. Schwab, SCHW. What's Schwab doing? Now that's Friday's action. And then if I come up here, I can see pre-market. It closed Friday at 50.77, currently trading what's that, 49.40 or so. So it's down a little bit. Not a big move on Schwab. We can check the news though. What's the news? They announced their earnings. Adjusted earnings, net revenue advance. Looks like they had a good earnings report. Okay, I'm reading this for the first time. Okay, they beat earnings while revenue was a bit shy. So pre-market, it's down a tiny bit, $1 or so pre-market. That's kind of a non-event, and we could very well see Schwab continue in the seller from here. But let's see what happens through the day. Schwab could open lower, little profit taking, and then take off with its somewhat positive earnings announcement. Let's take a look at Dell. Another tech stock. Yeah, baby. Look at Dell. Beautiful bullish run here. Stock pre-market is, let's call it 42. Close on Friday at 43.28. We can just see a quick look here. JP Morgan downgrades Dell Technologies to neutral from overweight. Price target at 47, almost there. JP Morgan downgrades. Okay, neutral. Okay, JP Morgan downgraded them to neutral from overweight. So there's a downgrade. I don't think that's big enough for us to do anything with today. I'm not willing, if Dell's going to come down a little bit on the open, maybe down to here, we could come in and sell a 44 credit spread, 44 call credit spread. But to me, that's more like jumping in front of a train than finding a stock that's in dire straits, and this one's not. Just a downgrade. Not that it's just a downgrade. They're important. Google was the other one that was on there. And the other one I can't remember, and I've lost it. They've taken the flag down. All right, Google is down from 108.87 on Friday to 104 today. Why? What happened? We can take a quick look here. I don't see any. Here we go. Alphabet shares are trading lower following a report suggesting Samsung could replace Google with Bing. Huh. Okay. Maybe that could happen. Not willing to do anything with that little piece of muted news. All right, let's go into our portfolio and see how we're doing. Yeah. Oh, we're just winning. We're winning everywhere. These are the current open trades. Let's take a look at these one by one. Apple. Please throw in the text box if you're in any of these. And I'm interested to see how you all are doing with these strategies. It's been pretty amazing what we've done since we started. But I closed this on Thursday because Apple did that. We weren't quite at our profit target on this day. Then Apple pops up in the nick of time. We would have been okay anyway if the stock had gone sideways. We got an early exit, took that one off. What the exit rules on these, of course, are to buy back the spread at 10% of your original credit. Our original credit was 24 cents, and we bought this back for 2 cents, roughly 10% of the original credit. Put that in as a GTC and take your profits off the table sooner than later. So there was a winner. EBIX, this trade expires on the 21st, which is Friday. I closed that one out as well on 4/13. Let me show you. I tell you, I've never, ever had this kind of performance in credit spreads. This was a few days after we got into EBIX. We got in the morning on a positive news announcement. We got in early. We got a nice little 35-cent credit, 16% profit, and we took that off. We got in on the 6th and then out on the 13th, a 7-day trade offering netting 16.28%. We bought the spread back for 3 cents, having sold it for 35 cents. Winner, chicken dinner. Yeah, baby. Micron. Doesn't sound very detached, did it? Micron is in really good shape. This one expires again on Friday. We have got the current value of the position is 1 cent, and that is close enough for a close. I'll go ahead and close that out for a penny. Hit close. I tell you, I've been doing credit spreads my entire trading life, 25 years, and I've never seen them work this well. And you know, it could be just a really good what's the word, hot patch, but I don't think it is. I think it's because of the way we're using software to find the very best opportunities. And this is another one, USO. This is not another one. We just traded this one because of news without even any scanners. But this one is shaping up for a really nice little profit. We are currently at about 3 cents, 10 cents, 7 cents. Look at the ask prices. That's about worth about 3 cents at mid price. We needed to come down a little bit. We've got theta over the weekend. We've got about what, 272 times 2, 540, $5.40 have come in from theta, if the stock's where it is on the open, and that will be a 1 week profit in the neighborhood of 11% or so. So that one will probably come off today. It will come off today because of what USO is doing as I speak. USO pre-market 71. It's down a little bit. It's right about here. Or short strike, way the heck down there. All right, so that's a winner. Another one, another winner. I got to stop being so cocky because as soon as I start doing that, we'll lose on a trade. But this is the what I wanted to do was give you a look at only the performance of our short-term credit spreads that we started doing last year. Here they are. just the short-term credit spread, 7 to 14 days, the sniper approach, news-based, different technical indicators, scanners, finding our directional edges, and this is the performance. One big loss on Pinduoduo that was related to Biden and Xi, the president of Prime Minister of China, fighting, you know, trade wars and things. Pinduoduo took off strong, and we got hammered on that one. That happens. But then you look at the overall results here: 29 total trades, short-term credits only, 90% winners. What? 90% winners, he said. Average gain to loss about the same, which is perfect. That's a good ratio for credit spreads, short-term ones. 13-day average hold time, and the APL, the average profit per trade, with losers baked into the price, to the return, is 13.44%. Loosely said, we're making 13.44% on average every 13 days. Double that. You could do twice, use the same amount of money twice in a month, and double that, 26, 27% almost APLs, cumulative APLs per month. That's what's possible. Imagine you're able to generate 13% every month. What would that do to your portfolio? Or 26% a month if you effectively use your capital and keep it working through the month. It's just pretty incredible. I'm very happy with this. I hope you all are enjoying the fruits of those of our labors here at Snipers. Okay, now I was thinking this I always start thinking about what I'm going to talk about Monday morning on the weekend. Usually Friday I start thinking about it, and I looked at it last night, and I was like, man, earnings season is approaching. Can we use earnings with credit spreads? Can we put the winds of strong earnings at our back, effectively giving ourselves even more reason for the stock to move our way by using a ranker called earnings growth? You can find this kind of information online for free. We do have it in Tom's tools, and I wanted to talk to you about earnings today. You know, in the earnings group, we use earnings as a catalyst for IV rush. We use straddles, we use calls and puts. It's a very elegant, sexy way to trade IV rush. But we can also use earnings to get some directional probability based on how good those earnings are. Every quarter, publicly listed companies that are trading on the market must announce earnings every quarter. Usually that starts in January and every 3 months later, but earnings happen every month throughout the year, concentrated on January, end of January, February, and every 3 months after that is when the sweet spot, the prime time earnings occur. Most companies announce on a calendar quarter basis. Now, earnings, as you probably know by now, is the #1 influencer for stock price movement. Good earnings drive markets, drive a stock up. Bad earnings drive a stock down. When a lot of companies have great earnings, that drives the entire market up, and vice versa. So one thing we got to keep an eye on going into the balance of the year is if with these interest rate hikes and inflation over the last couple of years now start to take hold and take a bite out of earnings, that could drop the entire stock market. So earnings is really critical. It's pretty easy to understand, and the relationships are fairly straightforward, and we can use earnings as a catalyst and help us make money. Now, companies that exceed expectations generally rise, and vice versa, and consistent earnings beats, meaning that they beat expectations quarter by quarter by quarter. If that happens, then you've got a really strong wind behind the back of your stock. So what I'm going to look for now is, let's find stocks that are in a bullish posture, that have had earnings beats, a series of beating estimates time after time after time. The idea is, if they've done that, let's say 8 times in a row, 8 quarters in a row, 2 years, then the next one is likely to be the same. So that's the general idea. So maximizing directional wins. Now you can go right to this ranker I'm about to show you, but you can also use annual high-low, We've talked about this in a prior sniper's call. We could use dividend growth. We could use percent change. Find a stock that's moving bullishly in some way. We're going to use high-low here in a minute, but there's others. And then once you have that list, then feed it through the earnings ranker to see which of the stocks that, for example, in this case, are setting a new high, have had the most earnings beats over the last 2 years. And then with that, we might get 1 or 2 stocks. That's all we want. 1 or 2 stocks coming out of this process, and then we can go out and snipe some short-term profits. Okay, so here's one way to do it. So I'm going to do this here. Okay, so I'm going to do 2 scans, 3 scans actually, to find the trade. First scan is find a directional reason, find a directional reason for the stock to be rising or dropping. So we're going to use annual high-low. You can use others. I'll point them out in a minute. And then we're going to take the result of that scan and feed it into earnings and find, of the ones that are setting a new high in our case, which of them also have had consistent earnings beats. They beat expectations, and they really announced great earnings over the last year, 2 years. And then from there, we're going to get our stocks, and then we'll go looking for credit spreads. So I've got some slides here to walk you through the process. This is a review. We've done high-low before, but what you want to do in Tom's Tools is you go into high-low, select your bullish or bearish bias. We're going to go for bulls today. Select penny plus weekly, hit search, take the results of that search using this little pop-up on the screen, save the top 25 or however many you think are setting very close to annual highs. I typically go 99% or higher within a hair of an annual high, whatever that number is, and then select my stock list and then click replace. Once you've done those steps, then you've got a list of stocks that are setting new highs, annual highs. All right, then what you do with that list, that my stock list, that's key. You take my stock list and then you feed it in to the earnings ranker right there. And here you can look for bullish or bearish. You can look for most actual earnings above estimates, and then vice versa. So if you're looking for a bullish reason for the stock to rise, of course, you would look for most actual earnings above estimated earnings. And then you hit search. Again, you can go bearish. You can do this whole thing over again and go bearish. Maybe we'll do that this morning, depending on what happens here. All right, and then when you get this report, you get all the stocks and the symbols and all the charts and picks and all that stuff. Earnings dates, previous post earnings. This is the main column we're interested in. Here, you can see on this list of stocks that are setting annual highs, we've got these 4 stocks that over the last 8 earnings periods beat. So each and every one of the last 8 earnings periods for these 4 stocks, each and every time they bested what was expected. So what do you think the chances of these stocks doing that coming up to this earnings season are? And believe me, other people know this. Other people are looking at earnings as a reason to buy stocks. All right. So, and then one last thing. So here I'm selecting the top 4 because the 5th one, they had 8 earnings, and over the last 8, only 7, they beat earnings expectations. Only 1 below. So let's just take the cream of the crop. In this case, you would say save the top 4 into my stock list, click replace, and then you're right back. Now you're at the point where you can take those 4 stocks and go after credit spreads or any directional system for that matter. Okay, before I get into the software and we're gonna go hunting here. Let's see what anybody has to say here. Okay, come on, Jeff. Good to have you in this group, brother. Glad EBIX was a nice winner, early exit. Leo saying USO twice, 2 times a winner. And you're once, twice, 3 times a lady. I don't know why I thought of that. Once, twice, a winner on USO. Phil said I closed 5 sniper wins on Friday. Apple, McDonald's, Gold, Snow, and VLO. Go Phil, go Phil. April so far, 10 for 10, following the principles April trade length is 6 days. The market is on. We're on, baby. Let's see what's up. I'm going to take a quick look. While we're doing this, I'm going to do this scan in a second, but let's do the top 10s here, and let's look for top 10% gains. All right. Now, these are lists where I didn't think or swim. I always get. I can feel my my excitement rising as soon as I start doing this. So I'll try to keep my pace down. All right, there's no real big gains in NASDAQ. Looking at percent change, just looking for sniper candidates. Let's look for the top 10 on the New York Stock Exchange. Nothing, honey, pennies. Let's look for the top 10 losses on the NASDAQ. And there's some here. Let's take a quick look here. The biggest dollar loss, let's do percent change, sorting by percent change. This one here, down 12. Oh, there's some here. Let's take a quick look. Okay, that one's down a bit. So it's at 5. I might sell at 5. That could be an interesting one. Let's look at Viavi Solutions. Boom. Those are the kind of ones, the stocks that we can come in and swoop some sniper profits like right now. Let's take a look at the options first before we even dig into the news. We could maybe do something on Friday. Yeah, but look here, everybody see the slippage? Gargantuan, not tradable. In fact, it's probably a good idea to keep your eyes here and not get too excited. That was a great chart, but there's no, the slippage is gargantuan. Here, gargantuan, 55 by $5. Are you serious? You're trying to keep us from trading? Yeah, that's what they're doing. Coin's got some, Coin has got some nice tight slippage, but I don't see the stock doing much. It's down a little bit, but not doing much. If I did anything with this, it would probably be an iron condor. So the credit spread at 90, maybe one at 50. Also, if you do that, make sure you look at Bitcoin. See what I didn't do that this morning. Let's take a quick side look. /BTC. These are Bitcoin futures. Bitcoin's down today, and that's probably why Coinbase is as well. Okay, what else do we have here? Coin and nitrous. Let's see. That's a good one. I think I checked the slip. That's the slippage already checked. All right, let's look at the top 10 losses on the NASDAQ or New York Stock Exchange. Top 10% losses. And this first one on SAI, no optional instruments. It's a good idea to have the trade grid up here when you're doing this. NIR, down 17%, no options. Don't even tease yourself by looking at the chart unless the slippage is tight enough. Here, it's still 50% wide. Not good. Now that could flatten. But man, that is a really nice bearish chart, a gap down. Why? Well, earnings. The earnings right there. Earnings happened on 4/17, which is this morning, looks like. So that happened this morning. Let's see how bad it is. Lower fee revenue. This is MW State Street Corporation trading lower after company reported worse than expected Q1 sales results. Down pre-bell. I just want to see if they've done anything about their future expectations. If we see them lowering their future expectations, that's a nice anchor around the stock's neck. And I'll have to dig in to see. So you can see here they missed their 1.64 estimate sales. They missed on sales only slightly. States with financial. If anybody wants to dig in there, I don't want to waste too much time. We could maybe come back on this. What I'm looking for is them lowering their future expectations. That's the piece of news I like to see. And I'm not seeing it without digging further in, but that's a potential trade on this one. You got to make sure that you feel confident the slippage will tighten, and it's pretty wide here. So I can go out to the next month, maybe see there if the slippage is any. You see the slippage is pretty nasty. It's 20% across the board. I don't know this stock too well, so I don't know that the slippage will tighten. So I'm not too excited about that one. All right, now let's do some scanning. I got to show you my slide. I spent a lot of time on slides, so let me give you this slide first. Okay, so you saw this slide last week. This is one I like to use. If you're selling credit spreads, which we tend to do here, and there's every reason to keep doing it, is when you find a bullish opportunity, also, regardless of how you find it, also couple with it high volume break above resistance. That's a good place at which to sell. Look for some good news and then sell a put credit spread at a support level as far beneath the stock as possible and net about 1% of potential ROI per day in the trade. We'll demonstrate all of that here in a minute. Now, bears, high volume breakdown. Again, look for a bearish reason the stock's dropped. Ideally, it's dropped below a support level on high volume, coupled with some bad news. Perfect opportunity to sell a bear call spread at a resistance level above where the stock happens to be trading. So that's what we're going to do right now. Let's go searching. Let's go dig into the software. I'm going to start by going to stock rankers. Stock analysis, and go after high lows. You can do this any number of ways. Get our back test date correct. Now, of course, we don't have any data for today yet. That will happen in 24 minutes. Let's go after penny plus weekly. You could also go after all optionables here. You can get as creative as you want. All optional stocks and indices is another thing you can go after. Of course, you got to check the slippage before you get in. So let's just go after the whole universe. Then we come down here. Wow. Wow, 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 wow. Look at these. All of these stocks from here with this yellow column here. This is where they're at. That means this builder's first source is at an annual high. If that's 100, that's an annual high. Scrolling all the way down here. 42 stocks on Friday hit an annual high. That's a lot. And then underneath, several are within a hair of that. So what I like to do is maybe grab, in this case, somewhere around 98, 99%. I'd say easily we could grab the first 100 of these stocks. We don't need a lot. We're only after one. And we'll save the top 100, all within either at an annual high or very close to it. We'll save those in our holder list called My Stock List. All right, now you can take this list and do anything with it. You can wash the data over and over again using different scanners. All of these most of these scanners have been talked about, and we do have education on all of them in the snipers on the snipers board. Okay, so under stock rankers now, notice here we have earnings rankings. So we're going to be looking for, of the stocks in my stock list, there it is. I'm looking for those stocks that have had the most actual earnings above estimated earnings. These are bulls. Can we get the directional wins of consecutive earnings beats at our backs? Maybe. Let's see. And here, look, this top 12 here. I'm not even seeing Oracle is not in this list, but you got all of these stocks here. All of them are within a hair of an annual high, and all of them have had 8 out of 8 earnings beats. They've beat estimates 8 consecutive periods, 2 years, 8 quarters, 2 years, beat, beat, beat. Now you can look at some of the stock charts if you like. Look at Crocs. I'm a little surprised. That is some. I think there's some ugly shoes. I've never had any Crocs. Let's look at FICO. Yeah, so we'll do some. We don't have to do any technical analysis just yet, but we can. Look at this one, Manhattan Associates, right at 155, in a nice bullish posture. So we don't have to look at individual charts. Let's let the scanner do the work. So I'm going to save the top 12 then. The 13th one on AZO, they've had 7 out of 8, which is still good, but all of these here, 12 above, have 8 out of 8. We want the directional wins of very strong earnings performance at our backs. So now I have a refined list. I'm down to 12 stocks now. I'll go to searchers, single strategy, put credit spread, highest probability of profit. When you go into this ranker, make sure you want to sort by this one. This is the one I like. Default parameters, short-term credit spread, go after my stock list, hit search, and there are none. All right, there just aren't any. So what do? We keep searching. So I'll go back into the ranker. Let's start over again. I'm going to do the same thing as before. I'm going to bring my list down to penny plus weekly, tighten it up a bit. The thing about the all optional stocks list is that it's over 3,000, and sometimes the scanner won't go through all of those 3,000. All right, so now we're down to, there's McDonald's, some good ones. Let's take the top 25 of these. Let's take the top 25. Chipotle, my favorite fast food restaurants in there. 25 into my stock list. And then I go to stocks, stock rankers, earnings rankers. Let's hide that. I want my stock list. Search. Which of these have 8 for 8? The top 4 here do. All right, you see that? 8. This one here, the 5th one down, only 7. Let's take this top 4 of these. Save them in my stock list. And then we'll go back to, again, I'm just repeating it. Go back into put credit spreads, washing the data, refining the data, adding more probability with every washing. My stock list, these are 4 stocks now. Let's see what's come up. Oracle, my alma mater. I spent 7 years there as a sales rep, and they are a great company. And the stock is proving it. And earnings have been beaten 8 out of 8 quarters. Earnings isn't coming up until 59 days. They have a really off quarter. I think May is the end of their year. I know that because that was a date that I was always trying to make my number by when I was a sales rep for this company. So this is good. This could be a nice little place for us to sell a credit spread. Let's see the 2 that it's given us. Both of them, one's a May 5 trade, and the other, which is a 21-day trade, the other is a 28-day trade. Again, these were given as of Friday's data. It's not going to be live. So what we can do now is go into a live view of Oracle. And the other thing about Oracle is it's also in the tech sector. Another reason for it to go up. So all of that makes me feel really good about putting on a trade on Oracle. So what I just did was I changed the spread type or the option chain type to vertical, so I can get a look at what kind of credit I can get at different price points. What price point? Oh, I don't know. Let's see. Let's find support. I would love to sell at 90, or we wouldn't. Hell, I'd love to sell at 78. We're not going to get any money for that. How close must we get to sell to make some money? 90 would be ideal. Why? Resistance, 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 resistance. That's now support, became support here. 90 is support. That's why. I'd like to sell there if there's anything there. Don't know if there is. How do I find out? I can look at the live pricing here. Now, this is a 4-day trade. Sometimes you can get some credit for 4-day. See there? Selling the 90, buying the 89 puts, 0. In fact, you'd have to lift it all the way up to maybe 93 and get only 4-cent credit on 46 cents of risk is 8-9%. So that's okay for a 4-day trade. So you could do it, but you got to step up. You got to step up to the heat. So sometimes though, if the IV is high enough in the morning, you can see some nice credit in the front month or the front expiration. So going back to 11 days, let's see. If I sold at 90, I'd only get 4 cents. Now that's $1 of risk. So that would be 4 cents with $1 spread, 96 in risk. And that's like 4% less than over 11 days. That's not going to work. We might have to go higher. If we sold the 92.91, that would give us 10 cents on 90 cents, which is an 11% return over the next 11 days. If we sold at 92, I like that. 92 is here. Now I like 90 better, but 92 is pretty good. Why? Well, here you had strong resistance at 90, and then on this day here, the stock gapped up, setting an annual high, and did so on above average volume. So I'm not as comfortable here, but it's worth a look. Maybe we sell at 92. Oracle is at resistance. This is another thing you want to look at. It's at resistance, having trouble getting above 96. Earnings is coming up in what 60 days, a couple months. Yeah, something like that, 6 to 8 weeks. So we could see some more fervor and people buying Oracle because of the amazing track record they have around earnings. But we've got plenty of time. So I think 92 would be reasonable. We could also try, just for kicks, what can we get at 91? I can get 6 cents at 91, 9 or 10 cents at 92, 93, 15 cents. That's a little too close for me. 90, if we did 90, 90 would be 90, yeah, not 4%. This is not there. 92 is the only one that makes any sense this close. So that shows a 9-cent credit. Let me go ahead and build this in Tom's tools here. So I'm just going to edit the trade and change all the strikes based on current data and what we've just decided we might want to do here. So April 28, we want to sell the 92 and buy the 91. Now the software is saying 10 cents. I'm going to go for 10 cents on this. So if we sold for 10 cents.
Change your strikes.
Oh yeah, thank you, buddy. Thank you, Paul. All right, selling the 92 for 10 cents. Buying 191 for 0. That's a 10-cent credit. Let's hit risk graph. Check it out. Oops. Make that 0. Now I got to figure out how many contracts I want to do here. At 90 cents a contract, I would say we would do 4. I'm sorry, 5. Is that right? Yeah. I want to get below 500 bucks. So if I did 5 contracts, that would be 450 in risk. That's as close as we can get. And there's your little Oracle trade. The IV is a little low. It's dropping. That's fine. Probability of profit is 83%. 83% statistical probability of making 11% on this trade over the next 11 days. Yeah, it's not that juicy, you know, but we got a good shot at a profit here. Let me post this in the Snipers live feed. For those of you that are subscribed to us with either earnings or hedge fund, you have access to this. So let me give you the trade if you want to play. There we are under the Snipers live feed. Let me go see if I can get 10 cents. There's 10 cents mid price. I bet Oracle's coming down a little bit. It is a slight bit. Let's grab it while we got it, because that's, if Oracle doesn't drop from here, the IV will drop out. I got to change my contracts. Moving too fast here. I only want 5 contracts. That's okay. Hit this button here. Cancel, replace. Drop yourself down to 5. Okay, so we'll go for a 10-cent credit. Mid price is now 11. Oracle must be coming down because the price, yeah, it is. It's coming down a little bit, hitting 96. Good. Come on down. Let's get our 10 cents. It'll find support at 94, probably, maybe 93, and then we're at 92.
I got 10 cents.
You got it. Awesome. Awesome. Oh, let me see if I can get 10 cents. No, it's not fair. Okay, so if you got 10 cents, I'm going to track it. I'm going to let it sit out there. And I will track this one. I think that was Earl, wasn't it? If I remember, if I recognize your voice, Earl got it. So I'll track this on the boards. Now, remember what I've been telling you we do is when we place a trade, it gets filled. If it doesn't get filled, if I find one I like, I just post the image like I just did. If we do get filled, by the end of the day, I'm also going to give you the risk graph. So last Monday, we had 3 fills, and I placed all 3 of these fills in the forum with the link to the article. It's not an article, it's just the trade. And there's the risk graph. And then you can pull the risk graph into your account by clicking the risk graph button right there. So that's a really fast way to make sure you're getting exactly the same trade. Your prices might be slightly different. From here, you can save this trade into your account. Now that takes us a lot of time to do that. So I've got my eye on it. I don't notice that people are using these posts. If nobody uses them, we'll stop doing it. Use this stuff. It's very valuable, especially if you're just getting started. Okay, with that, let's play. Let's do some more. Now, I like bullish trades, but I love bearish trades. Let's try a different approach. Let's go high-low, and let's look for stocks that are in the seller this time, that are tanking. We're going to go after all optionables and hit search. I haven't done this scanner today, so I'm anxious to see what. Not anxious. I'm excited to see what's going to come out of the. Wow! Look! Oh my God! Look at this. Now this could be in and of itself a directional indicator. 126 companies set an annual low on Friday. 126, and when you consider others are 99.9, 99 plus, you go to 99 plus, there's just I almost said a bad word that rhymes with ship with a P. A lot of stocks in the seller. Let's take the top 200 of these. See this? I'm looking at this column here. This is where I probably should have started. So let's take the top 200 of stocks that are either at an annual low or close to it. 200 stocks fit that bill. And then I go to stock rankers, earnings rankings, and then look for those with the crappiest of earnings. So now I'm going to go most actual earnings below estimates, take in the my stock list, which now has, okay, I just got my trade filled as well. 178 companies with crappy earnings. So look at this top one. 8 earnings periods, 7 of them were crappy. All right, now these are all pretty bad. I don't see 8 out of 8 anywhere. These 2 here, Bed Bath & Beyond and BHG. So let's just take some of these here. Obviously, these are a lot of misses. So let's just take the top 25 of these with crappy earnings. Save them. So now we got down to 25 stocks in the seller, approaching or at annual lows, crappy earnings, been missing on earnings announcements, really crappy stocks. Let's go ahead and swoop in like an ambulance chaser and sell some call credit spreads. Go to default parameter short term, my stock list. If I can find it, there it is. And let's hit search. Wash, rinse, and repeat. And there aren't any at the moment. So hopefully that gives you something to work with. Let me check the chat box here. Always happy to look at any stocks you're looking at. Paulina says, I use the post. Don't stop them. Exclamation, exclamation, exclamation. Okay, we won't. We won't. I was just trying to get a reaction from you. All right, we won't. I'll keep doing them. Don't worry. And Michael says he always cross-references his risk graph to the ones on the sniper board. Okay, excellent, Michael. So you're using them as well. Lee, Cleo, Dave. And then Dave used them. Dave, you got in for 10 cents on that. Okay, I'm sorry. We're not gonna take them away. Okay, so we got one trade on the board. We've got 5 minutes. Does anybody have any stocks they're looking at? We've got some really good traders in our group, Gerardo. I know somebody must be looking at something. I tell you what I was looking at today was natural gas.
Good.
Oh. What?
Correct.
Correct.
UNG.
UNG. That's what I was just looking at this morning. Well, I started with the futures. I was looking at natural gas, which is /NG. And it's bouncing off of 2. How low is natural gas going to go? At $2? You know, when's the last time it was this low? A long time. This would be a perfect place. Now I'm going to say it. A perfect place to sell a naked put. If you like that this commodity is probably not going to go to 0, it might drop a little bit. If you look at a max chart on this bad boy, well, let's just do it. Let's do a max chart. This is the natural gas. So over history, it has been as low as 144 right here. That's the lowest it's been ever. So I'm looking at that going, well, what if I just sold a put at support? And if I get hit with the stock, I take it and I hold it, because UNG ain't going to stay at $2 or $1.50. It's not happening. How can a commodities price go to 0? So then you can go into single here. You can even do a long-term trade if you liked. But from here, you can start to get a little creative. So here's UNG. I got to take it back to a. Actually, we're gonna go a little long. I'm doing this one. And natural gas today is up pretty big. Let's see if there's any reason. Energy stocks slipped pre-market Monday. Not natural gas. Natural gas popped up this morning. I don't see any really big news here. Yeah, nothing recent. But I do like the idea of maybe owning, selling some 6 puts on UNG. All right. So let's see what we can get there. Not much money. I can go to vertical here. Selling the 6 put, buying the 550. That's 3 cents, 47 cents. No money there. Now you could, as I said, say, well, maybe I just want to sell some puts. Now you could sell the 6 put for 5. Where's the stock now? It's 7. Stock's up here at 7. I like it at 6. I think selling a 6 put, maybe even going long term on it, would be a really good idea. In fact, let's just run the scanner quickly and see if there's anything in put credits. We do long term on UNG. To me, this is more longer term trade. I don't see any major catalysts. I don't see any long term credits on this, or naked puts. You could do either. Let's just go out 40 days, 39 days. Now there's some decent premium there. So you can go out 39-day puts. You can get 25 cents for them. They expire the end of May. So this is a 39-day trade. Let's put this in Tom's tools. Selling just the naked put. I'll do different ones here. This is like the things I think in my brain I shouldn't always say, but so this one should be taken with a grain of salt. It's more of a playful way to look at it, but this is like a no-brainer. This is like shooting fish in a barrel. Yeah, I'll take UNG potentially at $6 with a cost basis of $5.75. I'm willing to own UNG at $5.75 with the credit considered and hold it. If you're that kind of trader, and we're not talking about an expensive stock either, you could simply just sell the put. So let's let me get my expiration date again, May 26 on UNG. There it is. You can go further out. You can try to get more aggressive, shorter term. Let's get some more strikes here. Yeah, we're going to do this one. Selling the 6. Just the 6 put. There you're gonna make 7% on this put. 7% over the next 42 days, which is not bad. Probability of profit on this one is 73%. This one is you hold it. You know, you're gonna, if the stock drops below 6 and you let yourself get assigned, you'll own shares of stock at not 6 but at 560 your cost basis. So with that 40 cents credit, your cost basis now becomes 560. So the deal here is, if you're willing to own UNG at 560, swing away. UNG will go up eventually. You know, you're playing with a net. Now, the stock has risen today, so now there's only 25 cents available at 6. Now, of course, you can lift this up and go higher. This game is about how close do you want to get. So there you go. That's a potential trade. Only 4% over 42 days. Not a huge return, of course, but over time, you're just not going to lose money on this one. It's possible, I suppose, if UNG stays at $5 for years and years. Now, I could also spread this out here, and we're going to buy underneath the same strike, May 26. And we're going to buy underneath the 550. And that will reduce our overall risk and pump up the volume on our return on investment. It would help if I did a put. Okay, so now we're going to buy the protection underneath. And then hit risk graph. And I got to get the pricing right here. I got to do it here as well so I can get the actual pricing for today. So that's going to be a 10-cent credit on this spread. This data is Friday's data. That's why it's not matching up. Okay, so we'll get 10 cents. This gives you a 25% profit over the next 42 days. Cost basis of 590. The stock's already up here. So I like this. This is the one I want to do here. And hopefully I've given you some ideas. Some of you trade stocks. You have other strategies that you like. But this is like a bottom feeding system. In fact, I think that's what I'll do next week. Finding train wrecks, stocks.
Is that long option really free, or you just adjusted the
No,
price?
that's just the total net credit.
Ah,
Yeah. The spread, you can see here, at least Friday's day, the individual leg prices are not 10 and 0, but the net result for
got it.
us, credit. Yeah, it's just the net credit we're mostly interested in. So let's get this filled. That's what I want. How many do I want to do? All of them. All of them. $40 of risk. If we did 12, we'd be at 480. So I'm going to do 12 contracts. Our max risk is now 480. Let's go get 12, baby. And let's do this. Let's ask for 11 cents. Mid price is 10. Natural's 9. We might get 11. That might help. Confirm and send. Send. Doesn't hurt. I hate it when I get filled immediately. So we didn't get filled immediately. Good. So then I hit this button here. Cancel, replace. All right, I'll take 10. We'll get 10 on this. Confirm and send, send. And I'll let that ride. I'm quite confident that'll be filled over the balance of the day. So, okay, with that, let me check the chat box, see if I've missed any questions. Feel like snow. All righty. J. David got 11 cents. I got 10. Way to go, J. David. I'm going to track ours at 10. Phil and George like snow. Let's look at snowflake. What are you guys doing with it? What are your thoughts? What's your strategy? What's your plan? I don't, the chart's not screaming at me. What are you seeing that you like with snow? What's the I like snow all about? Talk to us. You can also unmute yourself if you'd like. I don't see it in the chart, but what's behind snow, Phil? Is it VWAP?
Yes. Can you hear me okay?
Ah,
Yeah. Well, I did well on this last week. I think I got 38%. It just seems to have a lot of protection on the call side, so it's not going to raise up. It has to get through resistance.
what are you selling? Call spreads up top here?
Yeah.
All right.
Yeah. So I saw a call at 152 and then the 155,
Got it.
and it's staying down. I got a couple of resistance levels there.
When is earnings on snow? You got to check your earnings. Earnings was the last earnings announcement.
Yeah, it was.
March the 1st, so June. You got plenty of time.
Yeah,
Earnings.
plenty of time, and it's just getting to Friday, and then I think it was making 9.6% by Friday, so it
Nice.
was only 4 days. But just trying to get there. Last week I made 38% on this. I'm just repeating what I did last week, or trying to.
Excellent. And so your trade then is selling the 152.50 calls?
Yes.
Okay. I don't love this one. I like that you made a lot of money on it, but I want some more juice behind direction. Earnings, new high, new low, something. It's channeling. Yeah. It's channeling, but no, you don't want this to happen. So why is that not going to happen over the next few days or weeks? So that's just if I was to sell a credit on this, I'd rather sell at 155 above the 200. I just don't trust that. It's kind of, to me, it feels a bit like just hoping the stock doesn't bounce back up between now and Friday.
Mm-hmm.
And I want to see some more pressure on the stock, more downward pressure somehow. The new high low, the annual low, earnings dropping, could be anything. Any of the other percent change, something. Earnings, news, something to keep the stock from.
I think it did. I think it showed up in the scanner maybe after, where you see that downward back in early April, where it had a big sell-off, and I think that's what made it show up initially.
Yeah.
No, the one over to the right of there, like on April 3rd or whatever. Yeah, that one. I think that right after that is where it fell onto the scanner because of that drop, and then it was below the two, the 50 and the 200 plus the other resistance.
Yeah, there you go. So you got some data, some news on this day here, which was 4 or 5. You can go back and check what happened on that day.
Yeah, I think that's why I took the one last week, when I first took that one out. It's probably the week before when I actually entered.
Yeah.
Late that week. So it did have some of the things you're describing. It doesn't this time, so I'm just hoping it just stays that way. You're right.
You want another date with the stock. The first look good with another date.
Yeah.
We did that on USO and it worked, So I like it. I like it. This is USO. We already have a trade that expires Friday, but I would say this is continually, you want to consider selling puts on USO. It's now well above the 200, and OPEC has cut supply. They could change that announcement anytime, so that's always the thing about oil that could gap in any direction. But I still like this one for a put spread. The UNG trade as well. You could also consider an iron condor. So I don't know, 550 puts, and then maybe sell the 8 calls spreads above and below. That's a decent one. Although I'm not sure why UNG is gapped up today. Let's look at the US dollar real quick here. US dollar is up. UUP is up. Gold therefore down. Yep. Silver. Silver, you keep silver and gold on your list. We had in hedge fund, we're doing it. We have a silver trade on that's doing really well. So, all right, everybody, I could keep talking, but I can't. I've got so much to do today. Sending lots of love. Hopefully you're enjoying snipers, and stay in touch. We'll see you this afternoon. If you're in earnings, we come back at 2 p.m. Eastern Standard Time. And then tomorrow, Hedge Fund Live at 3 p.m. Eastern. So have a great day, everybody. We love you.
Thanks, Mike. See you later.
Bye, everyone. Thank you.
Bye.